Let me introduce myself. I am CA Pravesh Agi. I completed my CA in 1985 and I am working as a visiting faculty with the Institute of Chartered Accountants of India and many management institutes and universities in Delhi and NCR. So let's do question number 9. Mr. Raju, a manufacturer at Chennai, gives the following manufacturing and trading and profit loss account for the year ended 31st of March 2018. Okay, so first let's examine the income side of the trading and profit loss account. He has sold goods worth 2 crore 32 lakhs. There was a closing stock of 2 lakhs. Now let's move on to the expenditure side. There was an opening stock of 71,000 and he has purchased raw materials amounting to rupees 2 crore 16 lakh 99,000. There was manufacturing wages and expenses to the tune of 5 lakh 70,000 and the gross profit has been shown as 10 lakh 60,000. So now let us move to the profit and loss account. There was a dividend from domestic companies 15,000. There is an income from agriculture which was net amount 1,80,000. Let's move on to the expenditure side of the profit loss account. Administrative charges to the extent of 3,26,000 was spent during the year. There was a state VAT penalty which was paid amounting to rupees 5,000. State VAT paid was 1,10,000. General expenses incurred were 54,000. There was an interest to bank on machinery term loan amounting to 60,000 was paid. Depreciation for the year was 2 lakhs, resulting into a net profit of 5 lakhs for the company. Now there is additional information. Following are the further information relating to financial year 2017-18. First, administrative charges include rupees 46,000 paid as commission to brother of the SSE. The commission amount at the market rate is rupees 36,000. Second, the SSE paid rupees 33,000 in cash to a transport carrier on 29th of December 2017. This amount is included in the manufacturing expenses. Here assume that the provisions relating to TDS are not applicable to this payment. Third, a sum of rupees 4,000 per month was paid as salary to a staff throughout the year and this has not been recorded in the books of account. Bank term loan interest actually paid up to 31st of March 2018 was rupees 20,000 and the balance was paid in October 2018. Fifth, housing loan principal repaid during the year was rupees 50,000 and it relates to residential property occupied by him. Interest on housing loan was rupees 23,000. Housing loan was taken from Canara Bank. These amounts were not dealt with in the profit loss account given above. Sixth, the depreciation allowable under the Act is to be computed on the basis of the following information. Plant and machinery has to be depreciated at the rate of 15%. Opening written down value as on 1st of April 2017 has been given as 12 lakh. Additions during the year used for more than 180 days rupees 2 lakhs. Total additions during the year 4 lakhs. Here we have to note that we have to ignore the additional depreciation under section 32(1). Now we are required to compute the total income of Mr. Raju for the assessment year 2018-19. Ignore application of section 14A for disallowance of expenditure in respect of any exempt income. So let's answer this question. First we will do the computation of depreciation under the Income Tax Act 1961. Now in the question it is given that there is an opening written down value of plant and machinery as on 1st of April 2017 amounting to rupees 12 lakh. Some additions were made during the year and they were used for more than 180 days and these additions were amounting to rupees 2 lakhs. Total additions during the year were 4 lakhs. So now the depreciation will be charged at 15% on 14 lakhs, that is the opening written down value of rupees 12 lakhs plus the assets which were purchased during the year and used for more than 180 days, rupees 2 lakhs. So that comes to 2 lakh 10,000. Now the depreciation will be provided at 7.5% on the balance 2 lakhs, the cost of the assets used for less than 180 days. The amount will come to 15,000. So overall depreciation for the year will be 2 lakh 25,000. Now in the question it is given that Raju has paid interest on bank. This was on a machinery term loan and the total amount was rupees 60,000. Now further in the additional information it is given that bank term loan interest actually paid up to 31st of March 2018 was rupees 20,000 and the balance was paid in October 2018. So which means that 40,000 will be disallowed because it was paid after the due date of filing of the return under section 139 subsection 1 and it will be disallowed as per section 43B. Now further, state VAT penalty paid will also be disallowed because here we have assumed that the imposition of penalty is not for the delay in payment of VAT but for contravention of provisions of the VAT Act. So entire 5,000 will be disallowed. Entire 5,000 will be disallowed. Now the depreciation debited to profit loss account is 2 lakhs, so it will be also disallowed because it is not as per the income tax rules. Now we will be reducing certain incomes which have been shown in the profit loss account. Dividend from domestic companies which is exempt under section 10 subsection 34 which amounting to 15,000. Income from agriculture which is exempt under section 10(1) and the amount is 1,80,000. And depreciation will be allowed as per the Income Tax Act 61 which we have calculated earlier, which is amounting to rupees 2,25,000. So altogether rupees 4,20,000. Now we are going to compute his income from house property. Now in the additional information it is given that housing loan principal repaid during the year was rupees 50,000 and it relates to a residential property occupied by him. Interest on housing loan was rupees 23,000 and housing loan was taken from Canara Bank and these amounts were not dealt with in the profit loss account given above. Now the annual value of a self-occupied property is nil and there will be some deductions which will be made on account of the interest paid on housing loan under section 24B. Since he has paid 23,000, so entire will be allowed. So there will be a loss on account of income from house property 23,000. So the gross total income now comes to 3,83,000 minus 23,000. So it will be 3,60,000. Now he will be allowed a deduction under section 80C in respect of the principal repayment of housing loan for rupees 50,000. So now his gross total income which is 3,60,000 and he will be allowed a deduction under section 80C after taking account the deduction of 50,000. The total income would be 3,10,000 for Mr. Raju.